Companies across America are taking a page out of the payday loan scam playbook, and they're now trying to trap their own employees with the use of company loans. Joining me now to explain how that works is Howard Nations. Howard, times are tough out there, and because of that, we always see the predators come out when times are tough. What is your observation about what you're seeing about this new economy that, you hear jobs are great and everybody's fine, but you drill right down, it's not exactly the case, is it?
Well, actually, Mike, the gap between the rich and poor is widening in this country almost exponentially. The rich are getting richer, but the poor are also getting poorer. And one reason is because many of the rich are stealing from the poor through predatory lending. The fact is that if you define paycheck to paycheck, which economists do, as not having enough savings to survive for 6 months, 76% of Americans are living paycheck to paycheck. 40% have less than $500 in savings, which means that they're one car repair or one child illness away from being a target for predatory lenders. They can't get the usual bank loans. They're a poor credit risk, and the payday lenders have had a field day with them with their 500% interest, making 15-day loans at 15% for 15 days. At their peak, the predatory payday lenders had more outlets than McDonald's and Burger King combined.
Howard, wasn't there a day where government paid attention to that, where we had, I realize right now, I know you saw this story, but there are more millionaires in Congress in the D.C. Beltway than there have ever been. And so I'm not suggesting that they give a damn or that they're paying much attention to what's going out there in real America outside the Beltway. But there used to be things in place that would prevent the type of predatory conduct that you're talking about.
Well, the Congress today responds to their corporate masters. To a large extent, many congressmen are legislative lapdogs for corporate America. And the people who are the subject of these predatory loans are the very least of their worries. These people are the American public are being trapped into financial servitude by predatory lenders who have their usurious interest rates and their hidden fees. For example, one of the things that's happened in recent years, you've seen the very ease of credit card access, car loans extending 5 to 6 year payouts, subprime mortgages loaned with the intent to foreclose. And we had the payday lenders, and the people who did crack down on them were not the Congress. The people who cracked down on them were the states. The Justice Department began investigating, and finally, now that we finally got approval of the head of the Consumer Financial Protection Bureau, in November, they sued Cash America International, Inc., who is a major predatory lender, for scamming 14,000 people with a robo-signing debt collection scam. And they were awarded $14 million to cover those 14,000 people, plus a $5 million loan.
Explain that scam. I mean, that's an ugly little story, isn't it?
It's an ugly story, but here's the problem with that story and many others, Mike. They steal millions and millions and millions, and in the case of the banks, billions and billions. But then when they get fined, they pay a $5 million fine. When they get caught, they got 14,000 people who are awarded $14 million. Sounds like a lot of money until you stop and figure out that's only $1,000 each. And a lot of them are being scammed for a lot more than that. So one of the major problems now is that the cost of scamming, the cost of predatory lending, the cost of banks just stealing us blind is that they then have to pay a very small percentage of what they steal back to the federal government in terms of a fine, and then they go right on about their business.
And taxpayers, the startling story that's emerging more and more is that taxpayers are actually paying for that because that predatory company is taking it as a tax write-off.
Absolutely.
Let me shift here just a second. The workplace loan. Yes. Where I grew up in the South, and
Yep.
I've worked picking oranges and watermelons, and about everything I've done it. But you would see migrant workers come in to work those fields, and there would be what they call a store loan. It would be a workplace loan. It was a way to scam people. Explain that story a little bit, because there's a resurgence of that.
Well, actually, I grew up in the South also, and I saw the same thing. And we actually lived in a home that was owned by the company, and that's what they did. The company store owned the homes. They provided the food. They provided the necessities. They leased the equipment that the people worked with, and then they deducted it from their paycheck. They even got to the point before labor unions, in the coal mines particularly, where they would pay their workers with scrip, which could only be used to pay off their debt. Now, the new form of that is called a service. They can't call it a loan anymore because they'll be subject to usurious charges. So today, the unscrupulous employers are combining with predatory lenders, where the employee advance is made in his paycheck. The employee receives the loan of $500 or whatever the amount in their paycheck. They pay interest rates of up to 165% per annum, but then the predatory lender is repaid from the paycheck. Right now, there's 6 companies and about 100,000 employees that are being scammed in this manner.
So what ends up happening, if you really drill down here, Howard, is you have the employer who's making more money by doing this, by cutting some sweetheart deal with some scamming third party that says, I saw this story out of Arizona Restaurant System, Scottsdale, Arizona. Company operates 28 Sonic locations in the state, and they allow their workers to take out these loans from $150 to $500 that last about 2 weeks. And then when they have to start paying them back, there's not only a fee to get the loan of about $25, but there's this ridiculous interest that kicks in. But that is a product, isn't it, Howard, of the employer actually working in cahoots with some third party?
Absolutely. And the effective interest rate on that is 100% to 165%. And the employer says, yes, but this is so much better than the payday loans, which is like saying, yes, but Stalin was so much better than Hitler.
Well, as you look at this story, the ugly thing is, when you follow the money, now some of these stories, the banking, the people that are fronting the money are even international corporations. I mean, they're not even American corporations, but a lot of them are just Wall Street corporations where they've shuffled around, moved a few shells to where you can't tell who they are. But if you follow the money, it goes all the way back to Wall Street. The effort to cover this up is pretty substantial, isn't it?
It is, and there has been one cautionary tale in that Inc. magazine recently warned employers that these loans that they're making now may expose them to complicity and result in discrimination suits against them. So even the corporate America's Bible is getting concerned about this.
Now, there's some solutions. If you were to say what is the best solution, where does it begin besides chopping off the head of the snake? What do you do?
Well, there are a couple of things. One is that let's don't overlook the fact that there are some good employer loans. These are not all bad. There's an organization called Emerge Workplace Solutions, which is a social mission-driven business which partners with banks and credit unions to offer short-term loans up to $2,500 at 9 to 18% interest with no hidden fees. They provide financial counseling, they help build credit scores, they train their employees to avoid debt, and they stabilize finances. But
now, that's a situation where the employer is really trying to say to the employee, let me make your life better. I want your life to be better because you become a better employee when your life is better. You're not worried about, can you pay for food? Can you pay for clothing and housing? Let me help you do that, which seems to be really a great thing for employers to be thinking about.
Right.
So this is the company's called Emerge Workplace Solutions.
Right. Now, there's solutions that need to come from the government, and good luck with that. But first of all, the people can try to avoid short-term high-interest loans to cover wage shortfalls. But what the government needs to do is to raise the minimum wage to a living wage level to avoid constant shortage of money. But as long as Congress and the politicians continue to use the poor as a political football to please their corporate masters in matters such as long-term employment benefits, our minimum wage, which gets kicked around back and forth with no real thought to the people that it's affecting. And until they start implementing full employment policies, this is going to continue. They could follow the guidelines of FDR, who hired the unemployed to maintain the infrastructure of this country, which is in horrible shape right now. They were hired to do child care for people who were employed. They were hired as teachers. And one other thing they can do is they can begin imprisoning the
criminals,
the bankers, and the predatory lenders. Put them in prison and let them serve some time instead of simply fining them by taking a small portion of their ill-gotten gains. It's never going to stop.
We perpetuate a culture of crime all the way from Wall Street right down to the main street in our hometowns, because that culture of crime seems to flourish on the idea that we don't have law enforcement that is willing to lock up white-collar criminals. Howard Nations, thank you for joining me, okay? As usual, it's a great report. It's something most people don't know about.
My pleasure, Mike. Thanks.